gets a house. Home Buyer Learning Center. Everyone 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 gets a house.
Action.
What's up, guys? Danielle Adornato here, a loan officer at Contour Mortgage. We are here at the Home Buyer Learning Center in Levittown.
What's up, guys? Christian Barrio from the Home Buyer Learning Center, your source for all things home buying and home learning. How do you get prepared? How do you buy? What's the process? And so today we wanted to have a home buyer seminar, but slightly different than normal, right, Danielle? How are we going to run this one?
Yeah, a little bit different. I mean, normally you can always refer back to both our YouTube pages to see the full process in depth. But today we kind of talk on the now and the trends and what's happening, the stats, what people are saying is going to happen, what's really happening, and break it down for everyone.
Yeah, I think the difference to what's happening in the market and then what's happening with someone's personal situation is always very different. We do seminars all the time, and we teach people the generalities of buying, right? The process, the steps 1, 2, 3. And we have a ton of that data. We have a ton of those videos that you can check out either on the Home Buyer Learning Center, YouTube channels, Instagram, and also Danielle, you can see a lot of her work there, where she gives a tremendous step-by-step, play-by-play about how to be a homeowner. But what we've learned is that though that really works in generality, most of the time people are asking, like, what about me and how does it affect me? And then we do a lot of reading and research, and Danielle brought some great statistics to the table that really don't answer the overall what about me question, right? It kind of answers the what's happening in the marketplace. And that's a lot of the conversation we're getting. So in this seminar, I'm going to be a little different. We're going to teach about the process, and we're going to tell you who plays what role, but not before we just clear the air about the market and what's happening as a whole, and should I buy now? And oh my God, the real estate world is going to implode and all this other stuff. We really want to get to the bottom line, the brass tacks, and see if there's any truth to this stuff.
And kind of break down, because as you're going to see, as we go over different stats and information, a lot of it's contradicting, a lot of it adds up, but a lot of it's like, wait, why did this one say this and that one? Or I heard this is going to happen. So we kind of want to clarify and let you guys hear it from the source, and remind you to always reach out to the source to get this information. And
yeah, I agree. Especially when we're reading a lot of things that we do, so many of it we deal in, right. We fact check. There's great sources. I mean, talking about Zillow as far as a household name, Redfin as far as a household name, and we get a lot of our data points, and a lot of stuff speaks to like the national news, right? We can help anybody across the 50 states,
yeah.
But it's a broad spectrum, and we're dealing predominantly here in Long Island.
Yeah.
Right. So, what's happening in the Long Island market? What's happening in the Long Island space, and how does it actually affect you? Right. So. We have some great articles that we clipped here from, this one happens to be from Zillow, and it said dating back to April, that 85% of homeowners expect that home prices and interest rates were going to fall. And so 85% of them decided to wait and stave off purchasing a home and going through the process.
And did those prices fall?
And they didn't. So then we go and we actually check out some Redfin data that shows in the last 12 months, we've seen an 8.5% home price increase.
Which will continue to do so. Well, we'll put that as our predictions.
Right.
I think we can mutually
say.
say.
But why? But why do you think? I mean, like, let's be real, right? So we're doing this a long time. Danielle, we know we're in the marketplace. Why can we almost guarantee that they're not going to fall? What do we know?
Well, we do know that interest rates have fallen for the last few weeks in a row, which is the most progress we've made on the interest rate side for a while. Yep. We'll find out what happens next, because the Feds did meet again, but they are predicted to drop again.
Right. So rates are dropping.
So if rates are dropping, they go hand in hand.
Right.
And that's just historical.
And so now I think with rates falling, what you have is an increased affordability from the buyer community. More people can afford more home, which now is increasing competition.
So what happens is, and why people are holding on to their homes, which is why we don't have inventory, and why the prices are staying higher up, is because no one wants to let go of their low interest rates. But as the interest rates start to kind of come down, people won't be as reluctant to hold on.
That's right.
May increase our inventory in the process, but what happens is the prices aren't going to decrease.
Yep, and there's a great fact here from Zillow, or some of their surveys that they take. They have here that more homes will hit the market as homeowners accept that mortgage rates aren't falling anytime soon. So actually, is what's happened. Rates have come down a little bit. We've seen 8% was the talk for a while. Now we're seeing 7% and even maybe a little less now.
Yeah.
So the idea that they are accepting that rates aren't going down further, what does that mean? If they're actually saying waiting isn't going to help me. Because if they are waiting for a certain rate, if you are waiting for a certain rate, It may never come. We don't know. There's no crystal ball to say, oh, hang on, because 3% is down around the corner. That's not the fact.
They're actually saying that the new normal, and when they do come down to where they're supposed to be, they're not going to go back down to 3%. That was a rarity. The new normal will be back in like the 5.5 range, the fives.
And we can only be so hopeful, right? I mean, that'd be a
yeah.
great place to go. We're already seeing the eights are kind of gone. We're seeing, the rates in the lower sevens, which is fantastic. And this is by no means to say that these are the rates. It's all about a personal experience. This is what we're going to get into, actually, is how it really matters to you. When we talk about these facts, it really is how does it affect you? And that's what we're going to get into. But I think rates just being now in that low 7 number actually has created movement. People are unafraid to go from a 4 or 5% to a 7 and move on. And that's creating more inventory.
Right.
But more than anything, it's actually creating competition. So for our buyers,
Because they're all becoming more, it's affordable more for everyone,
That's
not
right.
just the sellers who are looking to buy again. It's buyers who were maybe bumped out of that buying threshold because of that 8%, but 7 was doable.
that's right.
So they're coming back out.
And in the Long Island area, for the last 12 months, the average listing has sold 1.8%, about 2% greater than the list price. So that means because of competition, it's keeping the prices
Still
elevated.
driving it up.
It's actually driving the prices up. So now with more people being able to afford, what's that mean about competition? It's only going to get more difficult to find that house that you want. So while we do all these seminars, we really err on the side of preparation. It's about getting
And
prepared.
that question of should I buy or should I wait really comes down to what we just discussed, because it is about your situation,
That's
which
right.
we'll get more into. But it's not a matter of what's going on in the market or the world around us.
I think, what I'm seeing, I don't know if you feel this way, the majority of the people buying right now are certainly need-based, right? I think,
Need-based, ready buyers, yeah.
right, their leases are ending. Maybe there's a baby on the way. Maybe there's a marriage on the way. Maybe there's a divorce on the way.
Life factors that are...
Life factors, big life factors. So we're seeing a lot of those people being the leaders and at the front of the open house lines. And if you want to buy a home, you're a buyer who wants to own a home going against someone who needs to buy a home. Increasing the competition, it actually makes it just more difficult. So what are you going to do, right? The housing market, you don't want the prices to get away from you. The rates are coming down to a place where it's a little bit more affordable. You have people competing with you in the market that have need-based situations. So what are you going to do about it?
No, I think we should also touch on the fact that, you hear a lot on buy now, don't wait, buy now, don't wait. But that's not always the case for everybody as well. So the preparation part is key. And also, though, when you wait, that's the point of it. So if you are the person who can't afford the interest rate right now, which is a lot of us, and that waiting time is what you're doing to get prepared.
Exactly.
Which is?
So as far as getting prepared, right, one of the first things that you want to do is you want to talk to the right people, right? When it first comes to get prepared to buy a home, the thought is that you have to speak with a realtor. And that's a good first thought. They sell homes, so talk with a realtor first. Well, really, I wish someone would have told me, especially when I'm buying a car, to not sit in the car first, but sit with the finance person first so I would know what I can afford. I think the key is when you really have decided that I want to buy, despite the competition, despite the market, I need to know how I'm going to afford a home. That's the time that you have to speak with a loan officer. That's the time you have to speak with someone in banking who can tell you what type of loan you can get. What is your affordability? I think that is the key to starting out right.
And I think not qualifying or disqualifying yourself before that, because that's a big part of it. You speak with people who, oh, why haven't you? Well, because this, or because my credit, or because my down payment. Don't disqualify yourself first. Let us be the ones to do that if that's the case.
I've heard that a lot, and man, what a great point, Danielle. Like, people disqualify themselves. They don't believe. They go, oh, my credit's not that great. And they put it out of their mind as if they don't deserve because they don't have great credit that they shouldn't buy a home. Believe it or not, we've become experts at helping people to improve their credit. If we can help you to get a home and improve your credit along the way, you're all the better for it, and so are we. We've had a more successful transaction, a happier client, and we can help them with a better financial future. So dealing with credit hurdles are not a problem, but we hear this a lot in our seminars where we can show some compelling facts where affordability is there and competition is there, so you want to be prepared, and we have their back. But at the end of the day, it has to do with your specific situation. And none of these general seminars are ever going to really answer all of your questions. You can find a lot of little tidbits. You can find our little tips and tricks and videos, but having a one-on-one consultation is really important. And this is not just to say we're doing this because we want one-on-one consultations, but genuinely, part of the reason why you probably struggle to find really powerful learning and seminars and education on the process of buying a home is because the whole time you're watching and thinking and learning, it's, yeah, but what about me?
You're hearing about the world and the
Right.
statistics and this and that, but
Right.
it doesn't zoom in on you and
Right.
your life.
Right. We just got done talking about a client of Danielle's who's closing on a home, who was able to buy a home, who couldn't produce W-2s or tax returns. They're a business owner with 12 months bank statements, and that was enough to get them a mortgage. That person would have never thought they had their credit in place, their paperwork in place, but they're closing on a house now. So there are unique scenarios, unique situations where you'd be very surprised the result.
You know what they say, you don't ask until you know, until you don't know until you
That's
ask.
right, that's right.
Blooper.
But you should. It really
you
is.
don't know until you ask. You have to ask these questions and from the source.
I agree. I agree. You know, we also, and so now we've heard about the fact that homes are growing in spite of people thinking the homes are going to come down in value. They're actually growing in value. So now we're seeing a lot of homeowners who actually have tremendous equity.
You're hearing that word a lot these days.
Right?
Equity,
So-
equity. And what can you do with that? What does that mean for you?
Exactly. So how? What are some? What is equity? Let's talk about that. What does it mean to have equity in your home? What is that?
So equity is what you're sitting on as far as the amount of value that's left in the home. So your mortgage has a balance of X and the value is Y. The middle of that is what your equity is. That's for you.
That's your money.
So that's yours that you've owned at this point. You have put in the work, you've gotten that value in there, and that's yours to either pull out, use that. It's value right there.
Right. And so we get a lot of questions for people who own their homes, who are seeing their homes go up in value and saying, okay, it's the holiday season. I got a lot of credit cards.
Should we pull out of it? Do we leave it?
Right.
What do we do with that equity?
Yeah.
What will that do to my interest rate if I pull out that equity? Or
Yeah,
what
that's
will
a big
that
concern.
do? Am I going to pull, do I need it?
Right.
And it's really a need base then. It's
That's
what
right.
makes sense for your life again.
I think that's what's happening. I think people who have really great rates on their homes, maybe they have 3 or 4% rates on their homes from a couple years ago. They don't want to take a 7 or whatever rate it is now, but they do want to access that cash. I think a great question to ask yourselves is if you're accessing the cash.
Is it going to make you money?
There you go. If it's going to make you money
Then what?
at a rate greater
Yeah.
than 7%, right? Then you're doing a great business move. You're making a great decision.
Even in a case where maybe you're paying off student loans and your student loans are 20%.
That's right.
You're taking that 7%, I'd say it's worth it.
Exactly. So I think you have to look at things not compared to what is the world doing at large, because someone will feel really bad about cashing out on their house and paying a 7% rate compared to a neighbor who did it at 4%. But
Look
for
at it in a
you
business
doing
mindset.
it from a strategic point of view, paying off high interest rate loans and saving money there, I think those are those tricks that people are not really talking about.
Or
which is-
if the reason you're pulling out cash is to buy a property that you know is going to make you X amount of money, then it's weighing out the differences at this point, which I think everyone's kind of on that mindset of,
Yep.
how can I make money with my money, or how can I do this and
Exactly.
turn over?
You see a lot of people accessing some of their equity to buy other real estate. If you're going to, sure, you're going to take some money out, and it's going to cost you a higher rate than you'd like to have, but it allows you and it affords you the ability to buy a condo or a multi-unit property, and now that's income generating. You're not even going to think about that interest rate. It's income generating. It's creating wealth and generational wealth. So owning more property as a result of the equity in your home is a huge upside.
And you earned that.
That's right. That's right. Especially over all the years of paying off. And we don't want anyone to take on any rates that they're not comfortable with. But we back into this process with a mind of affordability.
And what makes sense.
That's
And
right.
that kind of brings it over also to this, back to another Zillow article that we had looked at some stats on. The new starter home will be a single family rental.
Oh, that's a good one. That's a good one. And we were talking about that a little bit. So a single family rental. So why, what is it? And something must have happened to me that's a very specific, hey, this is a change we're going to see in the market. Why this specific change? Danielle, why do you think we're going to see single families with rental units be the predominant first home? Why is that?
So there's a few reasons for that. You're going to hear more commonly now that people are looking for rental. They're looking for that additional income to qualify for the property because it's become harder to qualify for mortgage loans without that. So if you're somebody who can't qualify without it and you can't, for whatever reason, you don't have a cosigner, whatever it may be, the single income alone, you need that rental income, which helps you then increase your mortgage amount that you qualify for. Also the inventory on homes. So the lack of inventory is forcing people to, maybe they're building accessory apartments to help qualify too.
That's a huge, she just hit on something like, in passing that's actually a really big point. So the Federal Housing Authority, FHA, released a new rule that allows loan officers to use what was previously an illegal apartment, an accessory unit, and actually use some of that accessory unit, not a legal two-family now, an accessory unit. Like, so for example, in Long Island, basement apartments are pretty common.
Yes.
So they'll allow.
And they're almost always illegal.
And they're almost always illegal. So they will allow to use a portion of that rent to apply towards purchasing a home. And with this huge change, and so many houses in the market having these accessory units, that actually creates more affordability, which does breed competition. So we want to make sure that if you realize these changes are being made, where rates are coming down, single-family houses, and now what we're seeing is our contractor friends, Danielle specifically works with a couple of contractors who build giant developments. And in these developments, they're strategically now including secondary units because they realize these builders at the forefront of this moving mortgage industry, knowing that their customers can get more money and likely get approved if they put an accessory unit in the building. So now builders are building these single-family houses with illegal accessory units because they realize that the Federal Housing Authority has a program to allow you to use some of that to qualify to get a mortgage. So that's a huge change in the market. And
Now
you can see that a lot.
this was originally, and we were able to use this when it came to conventional loans, but primary loans, now we're saying that this can be your primary, an FHA loan. It can be your primary home and you're renting out simply the basement,
That's right.
That's huge.
Yeah, so that's creating a lot of affordability. Here we go. So it says, here's another fact, right? So we were really scouring the market for maybe even pessimistic facts. We wanted to see what were some of the worries that people are having. So here it says only 14% of Americans surveyed said that last month in November was a good time to buy a home. A new record of low monthly surveys of Fannie Mae had been conducted since 2010. So this is going back from 2010 till now. And right here it's saying that only 14% of Americans said that November was a good time to buy. Historically, I'm in the business 20 years, you're in the business 10 years. So I think that November and December have
Usually
never
slower.
been months where people are tripping over themselves to buy.
Right.
So I think these are some contrived facts.
But that's
right?
more where we go back to more generalized, where that's the norm in the industry.
Right.
But we're not
Right.
against the norm, and we haven't been for at least, 3 years now, at least?
Exactly. And I think if you aim your looking glass to read pessimistic news,
You'll find it.
you'll find it, right? If you want to find the reasons why not to buy, I'm telling you can find hundreds of articles of why not to buy. And conversely, if you search for reasons why you should buy and what are the great reasons of owning a home, you'll find a lot. So I think you also, in hopes to inspire you guys, aim your looking glass at the goal, not things that oppose your goal, right? If I wanted to try to win a race or some marathon or something, I'm not going to look at the lowest speed of the guy in last place, right? My marker is going to be like Usain Bolt and what did he do? Because that's where I got to be.
What you got to eat, what do you got to drink
Right.
before your race?
Exactly.
How to prep. Exactly.
These are the things. So if you have a goal in mind, it doesn't start by seeing the how-nots. It starts by experiencing the how-tos, getting prepared early, because we understand we have competition coming. And I think we need to get ahead of the competition. And that's really what we want to focus on today. So
I think that goes into what we were saying about if, we're not the guys to say, don't wait, buy now. That's not why we're here. But if you're part of the crowd that can't buy now and we are waiting for it to become more affordable, what can you do now to prepare for that time? Because we don't want you just waiting.
Right.
Waiting. Well, but prepare while you're waiting.
Right. So much of our process feels like buying even when you don't have a home. One of the things that we hear a lot when we urge people to get prepared early is we encourage them to send in documentation. We take an application and they send in documentation. And somewhere along the way, usually you hear, well, I don't have a house picked out yet, so I'll wait to send documents then. No. Hard no.
No.
The best practice and best behavior is get it done early. Let us encounter those hurdles that everyone may or may not have. We have some hurdles in the documents that we can or can't find, or what we can't scan over, or stuff that's blurry, and the simple things. We can knock all that out and set you off shopping the right way, so that when you're done with your loan officer, you can then go to a realtor, a licensed real estate agent, who can show you properties and negotiate for you. So, as a matter of fact, let's talk a little bit about that. Let's go a little bit more traditional in our typical seminars that we do, explaining the process and the flow. And Danielle, why don't you give us a bit of a process 101? How does the buying process go from start to finish? Who are the people involved? How does that work?
Sure. So as we had mentioned earlier, contrary to belief, first person we speak with in the mortgage process is the loan officer. So you're going to want to find out who your mortgage banker is going to be, your lender. Definitely something you would want to shop around for, get a referral on that. So you're not just speaking to Joe Schmo on the street or somebody who's not reputable, because reputation is huge.
Sure.
You'll hear about banks, the bigger banks, the ones who are doing the most commercials, not necessarily the most reputable. Mm-hmm. And your reputation is huge when you get that pre-approval letter and a realtor's looking at it and they know it's going to close and they know it's done by a thorough loan officer.
You know what? I would even, not to contradict what you're saying, I don't even think it's reputation as much it's service.
Service.
Because you know what? I would argue that Chase Bank has as good a reputation as you.
Right.
But I would bet my life that they can't serve a client the way that you do. I think service has a lot to do with it. So while reputation is really important, I think it's a matter of,
service.
Who is the
ability
professional?
to close, yeah.
Exactly. Getting the job done, right?
So once you find that banker, that's when you're going to want to go through the steps of the process. As Christian had mentioned, the documents and making sure all that stuff verifies and checks out. So everything that we discuss and the conversation, the pre-qualification conversation we're going to have, going over your credit, your income, your assets, that's all good and great. But once we verify it, that becomes the next step. Things get more serious. We're going to go over W-2s, 1099s, bank statements, do a credit check.
So let me ask you a question, Danielle. Like, let's say I'm a customer, and okay, I get it. You need W-2s and tax returns and pay stubs and things. What do you do with them? I send them to you. What do you do with with that paperwork?
So it's all being used to verify all the information we use, and then it just sits around. No, no, we go through so the point of that is to make sure that everything that we're speaking about is verified and checks out and it's legitimate. And of course, you're dealing with a bank, so everything needs to be verified.
Yeah, the rules don't. It's nice with that. We're allowed to take an application and say, hey, how much money do you make? Someone says, I make $50,000 a year and I have $25,000 saved. It's unfortunate that it's like, okay, great, we hear you, but now
let me see it.
Prove it, right? And how many
Everything
times
needs to be proved when it comes to a bank. You're dealing with a bank.
How many times do we see someone say, I make $50,000 a year, and all of a sudden their tax return comes in and it's 45? Right.
And it's not that they weren't being truthful or anything along those lines. It's a lot of times maybe they don't know what they're actually showing. Or when it comes to self-employed people, especially self-employed or business owners, we always request documents right up front for that reason. And you may make $500,000 a year, but maybe you don't realize all the things you're writing off or the payments that you're not showing or everything on there.
Well, let's be real. If you're a business owner and you have a great accountant, actually, I take it back. Let's say you have an accountant. What makes one great and one really bad? Everyone in their mind right now is thinking, well, the one that's
you don't get
great
audited
is the one that doesn't get me audited and shows the least amount of money to the IRS. That's what it is. That's what identifies.
But he's not our favorite.
But that's a really great thing when you want to dodge taxes. That's fantastic. Pay your taxes, but if you within the rules, if you're a CPA, can help you to write down your income and show as close to net zero as possible in your business, that has always served you well as a business owner.
But not as a home buyer.
That's right. That's what they don't tell you. They don't tell you that the years you're buying a home, no matter what, even if it's through the business and you're being paid through the business, you need to show enough to qualify. Well, let's say that doesn't work. There are specialty programs for business owners that have tremendous expenses, but bring in a good deal of gross income.
You'll often hear lately the term non-QM mortgages, non-qualifying mortgages, which then bring us into a different field of programs and whatnot designed for these specific situations.
Exactly. Some of these light documents or no document loans, which were gone many, many years ago.
They are back,
And
and
they're
they
back.
are so busy. So again, about disqualifying yourself, don't do that until you speak
Right.
with someone, because there's most likely a program that can help you for that.
And so that's someone. When we talk about that someone, we love our realtor friends. We have so many near and dear to our hearts. But when it comes to understanding your loan options and your affordability, we have to fight the urge. And I understand the urge because when I first got into business, the first thing I did, I was literally had a
Called a
child when I
realtor?
was 21 years old, 20 years old. I went to a real estate office. I won't say the name. When I was 21 years old, I said, I want to buy a house. And I really did feel like I was laughed out of the office. It was like, you're a young kid, you got nothing. What are you even doing here? All they need to do is give me like a little piece of paper how to get started, and I would have been so much better for it, right? I had to learn that on my own. I had to realize, I shouldn't have went to the realtor. I had to get my finances right. After a while, you learn that. Make sure you're asking ask any question, but just make sure you're asking it to the right professional. There is no stupid question. There's nothing that you're going to know. You shouldn't be expected to know how to buy a home. No. That's a daunting process. It takes a village. It takes multiple people, multiple companies, a loan officer, a realtor,
An
attorney on both sides, a title company, a title closer, insurance people,
an appraiser.
inspectors, appraisers. I mean, it really takes a village. But it's important to know
That
who
goes
does
back
what.
to our first bullet
That's
here,
right.
realtor versus loan officer. As we love our realtor partners, we have our roles, and
That's
we
right.
try to stay within them.
That's right. And so when it comes to knowing your finances, make sure you are consulting your banker. Realtors mean nothing but the best. The goal is to get you in a home, but we don't want them to pigeonhole you into these things, which are general stats and facts that apply to the world. But you have a very unique scenario. And trust me, yes, you. Whether it's your credit, the amount of money you have, where your money lives, who's co-signing with you, who's giving you a gift, how you make your money, you have a bunch of cash under your pillow. All these things are so unique to you. Make sure you're asking that question, having a private consultation, because that's going to get you home. That's what's going to get you qualified and on the path.
And I also notice what happens when I think either role plays the opposite or doesn't stay in their lane too much. Sometimes a client doesn't always freely share their information. So sometimes when I've had conversations after speaking with one of my referral partners about a mutual client, they may have shared different information with the realtor than they are with the loan officer because maybe they don't want to share their finances with you.
Yes.
So we get the real stuff.
Right. So I think we've done a good bit of detail here on what is the loan officer conversation, right?
Right.
Okay, so what's the realtor conversation? So now I've spoke to my loan officer. I know my finances, my affordability. I understand what I have to save, do on my credit and those things. What do I bring to my realtor? What's their goal for me?
So the realtor's ready for you once you get that pre-approval letter in your hand. Now it's time to have your consultation, your sit down with your real estate agent and find out what's fitting for you in your home search. So they're going to take over on that side of the process. We got you on the finances, programs, okay, what payment, what price point works for you. Now you're going to take that information, move over to the realtor, sit down, have a conversation like we are now, and discuss, okay, well, given this information, given this price point, given what you're looking for, let's talk about towns and let's talk about the house styles and start the search.
Yep.
So they're going to be the ones doing that, showing you homes, setting up appointments with the listing real agents, negotiating offers, negotiating terms.
So it's funny that you're saying the realtors are going to negotiate terms. I thought the negotiating terms part was for the attorney.
Attorney comes after that.
Okay. So loan officer qualifies you, gets your finances set up. Then a realtor takes you out to find a house, negotiates your terms, and then the attorney does what with that?
So with those terms that have been negotiated, now the attorney is going to put that into verbiage.
Gotcha. So they put that in writing. That becomes the contract.
Correct.
Then we take the contract. So now here's what happens. I think the buying a house and the process of buying a house is a little bit like a game of hot potato, right?
Absolutely.
First, it's goes to the loan officer. Let me take your information. Let me collect your paperwork. Even that is a game of hot potato, right? It's I got your info. Hot potato goes to the client. I need paperwork. Once the paperwork comes back, now we have the hot potato. We analyze that paperwork. We give you some affordability and a pre-approval. Now the hot potato then goes to the realtor. Realtor's job at this point is to find you a home. Get out, find a house you love, come up with a price. Where's the hot potato go next? To the attorney. Attorney then takes that negotiated contract, writes up the terms. Hot potato then goes to the seller and the seller's agent. So they can
have
execute.
to review it and sign off on agreements.
Then what? Let's say they do agree. Let's say everything's fine. They didn't change any terms. You offered $500,000 for a house. They said, great, $500,000. Then what happens? You have a fully signed contract.
Then it's back to me.
Okay, hot potato back to the LO. Okay. And then what happens with the LO? What are they doing during that process?
Now we're working on an actual file. So this whole time prior to that, clients are typically wondering, well, I thought, what do you mean? I am a file. I'm approved. I'm this, that. So you were pre-approved in that time. Now we get the file, and now it's time to get your file, your loan actually in, moving through the process of steps to the closing table.
Okay. So now it goes through the processing steps and the underwriting steps.
Now it's a lot of hot potato in the bank.
In the bank, yes.
That you don't even see or hear all about that because it's kind of like, okay.
Now, what's the realtor
officer
doing at this time?
Realtor will be, in the meantime, obviously communicating with the loan officer. So
Okay.
we're dealing with timelines. We'll be back and forth. They'll be in communication, but it's kind of their time to sit back a little bit while we take over.
I think in that moment, is it fair to say, hey, realtor, job well done, right? You found the house, you negotiated the terms, and it's not to at all put them in a side seat, but certainly
They are kind of sitting now
kind
in the
of like-
passenger seat, unless, of course,
don't have a hot potato.
something maybe comes up where there is a hot potato. In
Okay.
the case of,
negotiating.
let's talk
furniture or
about
something.
now once we have contracts, well, next step, we're processing it, and then appraisal comes up.
Okay.
Well, we may have a hot potato back to realtor if maybe something with value comes in play
Okay.
where renegotiations happen.
Okay, so if during the process something has to get renegotiated, then we
Back to
call
them.
in the realtor again, and then they get busy. Okay, great. So I mean, just in this 5-minute explanation, it's only gone from the loan officer to the borrower to the realtor. We haven't really bothered the attorney much. They've just kind
Aside
of
from
made the
contracts,
contract,
right?
right? We don't see the attorney again until later, I presume, right? So the mortgage is going to get done. It's going to get processed and underwritten. If you had to put a time frame on that, what would you say the processing time or the underwriting time for a loan is? What is the common time frame?
So now the loan really begins and the time frame starts once we have contracts, on average 30 to 40 days.
Okay, cool. And I think it's also really important because when we talk about the game of hot potato,
I know where this is going.
yeah,
And where this time frame can alter that average
I think 30 to 40
time.
days is, you're 100% right. I think because we're here today telling you that's the expectation. And so we're imposing on you a 30 to 40 day wrapping this thing up. Well, what that means is if we ask or we need, let's say, a pay stub, and you don't send it for 30
For
days.
3 to 4 days. Yeah, then there goes my 30
There
days.
goes the 30 days, right?
Which often happens. So we need to rely on each other just the same. So we ask for something, it's got to be in a timely manner. We're working on timelines here.
Yes.
So there's always going to be, in the state of New York at least, there's an on or about date. But we're also licensed in almost every state where Florida deals, which I do often. It's an on date. That's strict. We need our documents and we need them now.
That's right.
So we can't
Yeah,
break
so
those
do not
dates.
delay. So I think that again goes back to erring on the side of preparation and getting prepared early. How could it be that if you're buying in a place where there is a non-attorney state and there's a settlement date made on contract, like a state like Florida,
Which
you
we
have
can
30
mention
days to
quickly,
close?
on or about date in New York,
Yep.
which typically means on or about. So if my on or about date is December 30th, we usually have 30 days before or after that date that we can be. So we have that time frame. Now, date says on contract December 30th in Florida, we're expected to close by December 30th.
I've learned that they won't even call you to ask,
or when the
or
date.
they're just going to show up to the place previously determined, expecting a closing. So there are certain areas where you have to be really, really fast. But that, in none of these governing bodies, realtors, attorneys, mortgage officers, none of them are echoing this one thing, that if we have to close in 30 days, it's 100% on you. If that customer, that client, does not provide a singular condition, and those conditions are things like updated pay stubs, bank statements, clear copies of licenses, identifying information, pretty easy stuff to get, paperwork. If we can't get it from a client, then we can't close. So as long as you realize I've gotten prepared really well early on, there's not a whole lot we can ask you for along the way.
It's updating stuff.
Right? It's
if
updating
anything.
stuff.
Yeah.
So you want to give yourself the best chance, because with all of these people involved, we don't want to have to tell anyone, oh, we're waiting on paperwork from our customer for the last 10 days, and that's why we need a 10-day extension. So we really want to be Johnny on the spot and really fast when your loan officer is asking for paperwork. It's part of staying prepared, being prepared, and qualifying, and getting you to a closing on time. Now, let's say we did that. You got them pre-approved early, the customer sent in the documents early, you've now got them pre-approved, they're shopping with a realtor, they found a house, they negotiated, the attorney writes up the contract, it goes back to you, now you're working on the loan. Then what happens? Let's say the loan goes well, paperwork gets processed really well. What happens towards the end?
As far as setting up.
Just the process in general.
Okay. So we are nearing, well, we're setting up as far as closing dates. Where are we at?
Yeah, let's
Okay.
say the customer sent in all the paperwork, we have an approval on the loan, they've
Appraisal
cleared-
came in good,
appraisal came in
inspections,
fine.
everything's in. Okay. So at this point in that waiting period where it's kind of that, okay, what are we waiting on? What are we waiting on? If you're ever wondering, and maybe it's a couple weeks of waiting time, typically that time frame would be title. So title is a big moment that needs clearance on.
Okay. What is title? What's title?
Good. So title is going to be the proof of ownership, and it's showing anything that prior you want to check title searches and title any openings on that.
Oh, it's like a Carfax.
So you want to see, yes, we're digging into it. So on a Carfax, as he mentioned, you're going to find out what accidents happen. You're getting all the dirt on that house, on the car. Same thing as you would with a home. So you're going to see everything. Oh, this guy didn't pay his taxes. Oh, this is open liens, judgments. You might see red light tickets, which everyone thinks are never going to show up.
We
They
see
do.
even some town violations. Sometimes you opened a permit, they put a little violation,
Yeah.
they said, no, you can't build that tree house, and you didn't close the permit. Those things are open permits, unresolved issues.
So what a title search really is doing, it's showing that nobody else can come and take possession of this home. That's really the gist of it, but it also comes with a lot of other factors.
Right.
Who the owner of the house may have had things tied to, judgments and this and that. So they really dig into it. Aside from the simple, no one else can come and possess this home, we need to clear out any other open items that are left there.
And I think the title companies refer to that process as due diligence. So they go through getting deed recordings from the town, property details from the town, surveys from the township, and make sure that your fence line isn't out of possession, those kind of things. Pretty typical, believe it or not, even if it holds up your deal, title issues are typical, even if it holds it up.
And it's to protect you as well. So you don't want to be owning a home where in 3 years you have a new neighbor who moves in and says, hey man, you got all your stuff on my side of the property. And you say, well, I didn't know that. Well, when you're doing the survey search and title search, these are things that would happen. So in that time period, as you're waiting, title gets cleared.
Yep.
That's typically the last thing. You hear title's clear. Okay,
Okay.
well, what else could possibly be left? Okay, we're submitting the loan in for clearance. So the
Okay.
bank cleared or closed.
Right. And then at that point, now that we're getting ready to close, they have a date they're going to move in, you're going to get insurance, right? So now if you buy a house, you're immediately insured when you own it. So God forbid anything happens, you'll be covered,
Right.
right? And
This is
that's-
something you can shop around for too. We always suggest checking who you insure with your auto. 'Cause sometimes they offer good bundles with that, or we can always refer for that too. But homeowners insurance is something you can shop around for. Of course, everybody wants to shop around for the best rates, but you also want to make sure you're having the best coverage,
Right.
like anything else.
Guys, you know this, you know Danielle to be a source, not just of mortgage knowledge, but she has a tremendous circle of professionals, whether it's realtors, attorneys, insurance companies, title agencies. Danielle has been in a tremendous amount of networking groups that can really help to get you an affordable or the cheapest and best service while we're helping to get you financing for your home. So don't be afraid.
Yeah, and that matters to us
prepared.
too,
Get
especially
prepared.
in an industry of referral business, because we work based off referrals.
That's right.
We take referrals so seriously. So when we're referring you to somebody else, as far as another entity, whether it be insurance, an appraiser, or whatever, an inspector, any of these people in our network, so it's someone who we vetted out,
That's right.
really taken the time. We've gotten to know how they work and whatnot, because that has a reflection of us.
Yeah, it's important. It's
As
important.
well.
And guys, we have these seminars. We do these types of things. You might be seeing us on YouTube or Instagram. But if you want to see us and you want to connect the white in the eyes, we're right here on Hempstead Turnpike in Levittown. We are really easy to get to. We love having these kind of chats with you. You want to come in and just talk about your situation. No strings attached. You heard what we had to say, and I'm hoping that some of this conversation is making you ask yourself some questions in your mind. Hold on to those questions. Write those things down. Make sure you reach out to us. Make contact. Danielle and I are always here. We would love to serve you. We'd love to help you and guide you into home ownership in this next coming year. So
take a look out for any more, maybe more specific programs, seminars that we do, as well as homebuyer seminars in person that we offer here as well.
That's right, guys. I mean, we have such a body of seminars, but if there's something that you want to see, if you have questions, if you guys want to do a little Q&A, by all
shoot
means.
us messages. Let
That's
us
it.
know if there's specific programs you want us to go over more of, or maybe more specific questions for your own scenario too.
Guys, here from the Home Buyer Learning Center, I want to just provide you the information that you need to get you into home ownership. We really do appreciate your time hanging out with us today. We'll bring some more seminars and some great content. Make sure to plug in, follow Danielle, message her, ask her anything you guys can. I certainly, for one, am very thankful that you guys have joined us today.
Thank you for tuning in, guys.
Thanks, Danielle.
Thank you.
All right, guys.
See you next
See you
time.
next time.
Home Buyer Learning Center. Everyone gets a house.